on, let's talk a little bit about the report 2021 in retrospect, India Impact Investment Trends, and try and learn some broad insights that have emerged from our analysis. My colleagues, Ramraj, CEO at Impact Investors Council, and Vedant, Assistant Manager, and I will be making a short presentation on the report findings. Over to you, Ramraj.
Thank you, Deepanshi. Very good evening, ladies and gentlemen. This is Ramraj. I'm here to provide some perspective on the year gone by, 2021, India Impact Investment Trends. This is the second of our reports. We did the first edition of this in 2020. That was very well received. It continues to remain one of our most downloaded reports from our website. And we are hoping that 2021 will also give you all a great perspective in terms of what's happening in the space. So what I'm going to be doing is I will quickly give you a little bit of a quick introduction to what IIC is, our research pillar, and then dive into the analysis and trends. I'll give you first the high-level trends, and then my colleagues Deepanshi and Vedant will take you through some of the sectoral insights that we've been kind of seeing. Yeah. So that's the broad plan for the next 15 minutes before we move into the panel discussion, which will really try and ask harder questions in terms of how the sectors are doing overall at a macro level. Let's go to the next slide, please. Yeah, so I don't want to spend too much time on these couple of slides, but essentially just for the benefit of some who may or may not be as familiar with IIC, we would want to, think of ourselves as the preeminent national industry body to strengthen impact investing in India. Our mission is to strengthen the flow of private capital and build the narrative of India being one of the important and innovative impact destinations on a global platform. We are a not-for-profit Section 8 entity, and we are mainly funded through membership fees from our members. We presently have more than 50 prominent impact investors and foundations, DFIs and others. And what we've really looked at and focused on as a part of our efforts is really trying to bring together a lot more research and analysis to support investors and other people understand the space. For those of you who want to know more, IIC.in is the place to go to get a better flavor. Let's move to the next slide. Okay, quickly about the research pillar. So our aspiration is to provide our members, impact investors, policymakers, and other ecosystem builders with unique insights on what is happening in the India impact investment space. And we wish to do this not through anecdotal stories, but through data-driven research and analysis. I would say that's one of the strongest aspirations that we have as an organization, that we continue to remain relevant to our stakeholders. And at the center of this entire effort is our investment database that we've built over the last few years. We essentially capture venture capital activity in fair amount of detail and then use predefined impact inclusion criteria to put together a database of impact enterprises. And we today have an investment database of more than 800 impact enterprises. Much of that information we collect from public sources. There's a lot of information that many of our members also provide. And overall, we have a fair amount of data in terms of how these impact enterprises are doing and so on and so forth. Our research essentially leverages on this and spans across 6 central themes: equity impact, equity capital for impact, debt capital for impact, climate tech, blended finance, gender lens, which is something new we are starting. Haven't really done too much work, and also looking at diversifying capital into domestic sort of sources. I think that's a little bit on the research pillar. I just don't want to spend too much time on this, but I think this is important for us to give you that flavor. Let's just get into the data on 2021. Okay, so these are some of the high-level highlights of the report. It's about we've had about $7 billion mobilized into impact enterprises in 2021. 300 companies with about 345 equity deals have raised this $7 billion. Market has been quite active. We are seeing almost 135% rise in the total investment volume. The sector which is really seeing a lot of initial emerging activity is the climate tech sector. This is a sector which has seen the maximum deals this last year, and we'll talk about that a lot more in detail. And also, out of the 300 enterprises that we spoke about, more than 62 of them are either founded or co-founded by a woman, and so 62 women co-founded enterprises raised upwards of $1.5 billion. So those are some of the high-level messages. Let's quickly get into some more detail. So as I said, the sector is seeing quite strong investor demand. As I said, the total investment volume has grown by 135%. But overall, if you look at the number of deals, they've been kind of flattish. There's only a growth of 6%. And essentially what this means is that, a large part of this growth has been actually catalyzed by a substantial increase in the number of big ticket deals. So what we are really seeing is we are seeing a substantial increase in the number of big ticket deals, which we have loosely defined as 100 million and above. So that's something which is really helping the sector grow. And obviously, therefore, the average ticket size is also growing. Okay. Out of these 300 transactions, the companies that we spoke about, 350 transactions, we are seeing almost 80 of these transactions emerge from the climate tech space. And that's something which is very heartening. That's something that we will talk about. But it's important to mention that a lot of these climate tech deals are very early stage deals. These could be mostly seed stage or pre-series A transactions. We haven't seen any very advanced late stage transactions here, but nevertheless, something very, something to be happy about. One of the unifying threads of this entire sort of, deal flow has really been the focus on digitization of services. Really for the Bharat audience, tech-based models is really what we are seeing as one common theme. I mean, there may be other themes, but this is something that is fairly, central to a lot of the transactions. And as we said, almost 60 impact enterprises have raised about $1.5 billion. This is a significant jump over the amount raised in previous years. However, the significant jump is really because of one or two deals which have been very, very large. One or two women co-founded or founded enterprises raised large amounts of money. So while overall this is something which is, I would say, something for us to be happy about, there's a long way to go before we are really building a much more of an equitable sort of an environment for women-led impact enterprises. So those are some of the high-level report highlights. What we are going to do now is just getting into some of the detail, and we'll start off with maybe the gender space. And essentially, before we start talking about, looking at the sector from a gender perspective, and my colleague Vedant is going to do that, I think it's important for us to explain that when we look at really using a gender lens, there are multiple dimensions of what constitutes, analyzing it from a gender lens. We don't have all of the data, and it's not very easy for us to generate a lot of that data. What we really do have data for is really the women founded or co-founded enterprises. And we've kind of used that as one of the elements. And I think it's important for us to highlight that, to say that by no means is this comprehensive. It is our aspiration to build that gender lens index for the impact investing portfolios in India. But at this point in time, all of the data that we are showing here is really only looking at women co-founded or founded enterprises. And that's something that is important to highlight. So those are some of the high-level messages. I'm just going to hand over to my colleague Vedant to take it over from here. And after he does his bit, I think we will have Deepanshi also doing a bit before we conclude. Over to you, Vedant.
Thank you, Ramraj, for this high-level summary of India's impact investing landscape in 2021. So just to get to something on the positive side, we've seen a 5x rise in investment capital that's been raised by enterprises that have been founded by women in 2021. And I think this is essentially constituted 22% of the total impact capital that has been raised by women founders in this year. Furthermore, when we talk about representation, 1 in 5 enterprises that have raised capital over the past 3 years have been founded by women, and this share has remained relatively constant in each of the past 3 years. When we look at the sectors, we see that tech dev and financial inclusion have been the primary sectors when it comes to a relatively higher share of women founders. And interestingly, financial inclusion has had a consistently higher share at around 26%, while we've seen an increasing share of women founders in tech dev. The next sector we talk about is climate tech. So climate tech has been a sunrise sector, and it's seen a lot of investor interest. There's very active deal flow, primarily because we're seeing more and more investor interest in funding business models that focus on sustainability, climate change adaptation, and mitigation. So we've seen 79 deals in climate tech, and we've also seen the volume of invested capital rise by 200%. Furthermore, climate tech also has a very, very vibrant early stage ecosystem. Almost 65% of the sectoral deal flow has come from seed stage transactions. And we've also seen a 40% rise in seed stage activity in 2021 in climate tech. When we look at the subsectors, we see that sustainable mobility essentially gets the lion's share of the impact investments that have been raised in this sector, around 80% of it. But we're also seeing some emerging sectors come up, particularly environment and natural resources, and also and also waste management. The next sector would be financial inclusion. Financial inclusion has traditionally been the mainstay of India's impact investing ecosystem, and even in 2021, this is what the deal flow and the investment kind of reflects. So financial inclusion, enterprises focusing on financial inclusion have raised almost 1.9 billion, and this is slightly more than a quarter of the entire impact capital that has been raised in India in 2021. Furthermore, 2020 was a tough year for the sector, but we've seen a very sharp recovery, both in terms of deal flow and also investment volume. So investment volume has more than doubled, while deal flow has risen by around 20%. Interestingly, a significant portion of this rise in investment volume has come from later stage deals, which also sort of makes sense because financial inclusion is a mature sector. On the other hand, seed stage activity has remained relatively steady. In terms of subsectors, we see that enterprises that focus on SME finance have attracted almost 60% of the sectoral capital. Furthermore, fintechs have also done well. Particularly, we've seen a rise in more innovative lending and non-lending models. The next sector we're covering is agriculture. Agriculture is a sector that has done consistently well in the past 3 years, and even this year, we've seen investment volume in the sector more than double, and we've also seen a healthy deal flow. Furthermore, we're seeing increasing signs of maturity in the sector as more and more volume and deal flow is moving to Series A and beyond stages. So this year, 60% of the deals were in Series A and beyond, as opposed to 40% in 2020. However, the early stage activity has remained sort of stagnant this year. In terms of subsectors, market linkage platforms like, let's say, Ninja Cart and Dehat have been attracting the majority of the capital in this sector. And in fact, more than 40% of the volume in agriculture has gone towards firms that sort of focus on linking farmers to the broader market. Now I'd like to hand it over to my colleague Deepanshi to talk about the rest of the sectors.
Thank you, Vedant. Yeah, thank you, Vedant. Now coming to a sector that has carved out an integral space in the impact sector in the last few years, technology for development. So tech for dev as a sector we have seen has continued to show robust momentum over the last 3 years. We observe early stage activity remaining consistent, and there is an upward trend in funding raised by enterprises in later stages, primarily Series B and beyond transactions. Further, what we see is that there are greater opportunities and enhanced investor interest in segments such as content localization and digitization of SMEs. When we look at the subsectors, certain SME tech companies such as Business and Khata Book and content localization companies such as Daily Hunt have raised significant amounts of capital, leading to an overall spike in the investment volume in the sector. Overall, we have seen this sector grow consistently in the last 3 years. Moving on. So education, pandemic year 2020 was an exceptional year for education, definitely opening up opportunities for digital learning in the wake of nationwide school closures. However, in 2021, we see the sector is sort of consolidating with sluggish movement of deal flow as well as investment volume. We see that there is a general decline in the deal flow across all stages of funding. In terms of subsectors, we observe K-12 and test prep dominating the entire space. We do see the overall investment volume is driven by a couple of deals in these segments, K-12 and test prep, securing over 60% of the capital inflow in the sector. Now moving to the last sector, healthcare again this year has seen some interesting dynamics. While healthcare as a sector has seen quite a jump in investment volume from 2020, the overall investment sentiment seems to be quite muted. There is substantial dip in early stage activity. And what we observe is the growth in investment volume is largely driven by a couple of big ticket deals. Again, we see greater investment and attention and interest in certain models, such as digital service models, where digital pharmacies continue to attract maximum capital. Certain other crucial segments, such as product and R&D, enterprises and devices and diagnostics, have not been gaining enough traction over the last 3 years, is what has emerged in our analysis. Now, moving on, quickly summarizing our insights from the report. Post-pandemic growth in investment volume across sectors is driven by an increasing number of big ticket deals in the later stages. The deal flow momentum we see is more or less in the same range as 2020. Needless to say, financial inclusion attracts the maximum capital, but what we really see is climate tech is coming on its own and has emerged as the most active sector with the highest number of deals and vibrant early stage activity. Across the sectors, we see tech-based models focused on service delivery or software solutions, showing greater traction in terms of investment volume. And finally, when we apply a gender lens, we observe 1 in 5 impact enterprises that raised capital are either founded or co-founded by women today. And this trend is sort of consistent across the last 3 years, 2019, 2020, and 2021. In terms of sectors, financial inclusion and tech for dev have done a better job in supporting women impact entrepreneurs in India. You can read the full report at IIIC.in publications, and we are also sharing the link of this report on the chat box. Now, before I actually conclude the presentation, I have an exciting announcement to share. The 4th edition of our biennial flagship convening, Prabhav, is around the corner. Prabhav is the foremost global convening of impact investors taking place in India. Prabhav, over the years, has traversed a wide range of impact capital stories, stakeholder dialogues, and LPGP interactions towards a cohesive impact investing ecosystem in India. Prabhav 2020 was a success, despite a virtual event with over 700 delegates and 130 speakers representing 25 countries. And we hope to make this year's Prabhav even more impactful with dedicated focus on multiple areas, such as equity investing, debt, climate tech, gender lens, blended finance, mobilizing domestic capital, and so on. Prabhav 2022 is a physical event scheduled for 12th and 13th September in Delhi. So please stay tuned for more updates from our side and do check out our Prabhav website for more details. IndiaImpactInvestingMeet.in.